8% interest, the thing we never thought we'd hit, we have now done. It's time for your Twin Cities real estate market update. My name's Joe Carmack, and before we talk about interest rates, let's talk about home prices. First number, we saw another 365. So that's been basically what we've been sitting at flat since January. As you can see there, we just took a little dip in the middle of our year here, but we're currently sitting on par for the beginning of the year. What was interesting, I thought I should point out, if you look at 1 year ago today, we were up about $8,000, and then from January 2022, $340,000. So for those that were sitting on the sidelines hoping for better sale prices, we're already up $25,000 since January of last year. And so really prices haven't come down. Now, I am for almost the first time ever going to give you somewhat predictions of how we think this is going to trend. I have no crystal ball, but why don't I show you a few ideas and we'll kind of run some scenarios. So what you're looking at here is the month-to-month changes. The previous was that rolling 12-month average, which is a better macro lens view. But to be honest, if you're looking at buying or selling a home in today's market right now, you don't really care about that. You want to know exactly month-to-month how your sale prices are changing. So that's what you're looking at right here. This number here is where we're at in green, and then all the previous bubbles are also Septembers from 1 year ago. So the green dots are Septembers, and then you can see, I'm going to reference this again in a minute, but from the January to usually around July is when we peak, and then we're coming back down. So that being where we're at right here, we've come up, and then we're on our way down here. So the question is going to be, how far down will we go? You will absolutely hear in the news and wherever, sale prices are plummeting. Yeah, but it's complete misrepresentation, to be honest. We talk about this every month, but I thought this might be a better visual for you guys to see exactly what we're talking about. So let's play out this scenario. There's really two scenarios that I think are going to happen. First scenario is going to be if rates stay high or they increase. It'll be something like this. Now, this isn't super scientific. This is just my illustration for you, but you can see kind of that curve. I'm essentially giving you a rolling 12-month average number there. Prices would come down a little bit. If our rates stay where they are, even if they don't go higher than almost 8%, which I'll show you in a sec, that will push prices down. People are not going to be able to afford that for very long, so that'll pull it down. That's not a huge surprise. On the opposite scenario, and that would be if rates decrease, this is what's going to happen. So if there's any decrease at all, I would say the market is so starved for better interest rates, and they keep just getting that gut punch of more rate hikes that as we get through the winter months, which already slow down anyways, people are naturally going to pull out of the market when the snow starts to fly. That will automatically be bringing our prices down. But if we see those interest rates go down over the next few months, this winter generally, then I think that could also create some optimism that creates a ton of fuel on the fire of the spring market, so that when January and February roll around, if we're coming out of those holidays, people are naturally ready to get back into the market anyways. As they do, you can see that V jumps back up usually around January. If that's also fueled with lower interest rates, even if we're at 7.5 or 7.25, I absolutely think that's going to push our sale prices up even more significantly next. This is a slide that I reference basically every year, and I'm going to tease you with it now, but 21, we went up 16.3, we went down 5.6. 2022, last year, 14 and 8. This year, I'll show you in a minute what we're going to get, but basically every month I'm going to be referencing this one, and this is what you're going to want to keep an eye on from month to month so that we can see how we're going to be taking off in the spring and from what starting point our sale prices will begin the year. Let's talk about where interest rates are at. Now, this slide from last month, you can see we're at 7.25, a little touch higher than that. Even that, we were kind of feeling the pain. Here's where we're at currently. And as you can see, let's start over here on the right-hand column there. You can see we actually touched over 8% this past week. Fortunately for me, I pulled this yesterday and it had come down just a touch, so it doesn't look quite as bad, I guess. We're at 7.9, which is just crazy. I'm shocked. I really didn't think we would get over 8, but yet here we are. So this is, again, what we're referencing. We started the year around here. Things really creamed up, and we were thinking we'd plateau, and then they didn't, and then they've gone up some more. So I still can't imagine we're going to go much higher than 8%. Who knows? There's really no predicting what's going to be going on, but this is where we're at currently. We're hoping that next year we'll be doing this number. That's sort of what they're saying is going to happen. Who knows? At this point, I'm not in the prediction business, and I'm just trying to make educated guesses for you guys. But the main thing that's going to be affecting is your month supply of inventory. Now, this is a zoomed in view. I'll give you the pulled out in a second, but we did go up 0.1 month supply. That's a really good indicator. The lower that number is, the more of a seller's market, the higher more of a buyer's market we're in. And we've wanted to see this curve. So this is not a bad thing. It only went up 0.1. But as you can see, basically every other month we're going up about 0.1. So as we zoom out, that red line there is where we would like to be. That's sort of that balanced medium. If I had it my way, I'd be at or below that, slightly below that. But if we're above it, would be a buyer's market. So where are we going this winter? I think it's pretty safe to say that number is going to keep going up. How much? Who knows? I really don't. In November 2019, you can see we're at 2.3. I think that's a pretty good ballpark that will come into there. And then we'll have to see what those interest rates do. The sale prices, like I talked about, drawing back would be because this number keeps going up or keeps going down. If it goes down, prices are going to be going up. But they're not completely in lockstep. I mean, they do function independently. This is the relationship between how many buyers are in the market versus how many sellers. Right now, we've got way more buyers, even with interest rates at freaking 8%. We're still in an extreme seller's market. So because of that, there's a ton of pent up demand. People are genuinely confused. Like, how are people still buying houses at 8%? They still are, and they still will be. Even at 8%, there's still way more buyer demand than there is seller demand. And so we're going to keep an eye on this one as well. Two things that we're going to go over. Days on market, we keep an eye on. This is a little surprising to me, actually. I expected that we would see this number go up a little bit more. Green dots in there again for you for the past several Septembers, just to compare it to. And there's nothing particularly notable. You know, we're just kind of doing this number here with what things did last year. I would not be surprised if we see this number going up more so this winter and then coming back down in January and February. I don't think it'll be anything like last year, though. This was really our market just seeing a big gut punch from the first time rates really started to spike. That with a super competitive market, people weren't going to be paying 20, 30, 40, 50,000 over list price and having a 7% interest rate. That was a complete shock to the market. And that compounding with the normal winter seasonality when people pull back anyways. So that's why we saw that big spike. I think, unfortunately, people are going to be a little more used to it. But we're at 8% now. You know, we were at 7 or whatever a year ago. So I do think it'll slow down. And I think with the news of it coming to 8%, that's going to have me presuming that it'll be a higher increase in days on market than expected. Finally, back to those sale price numbers. This is probably the most important slide that you'll see and the thing you need to be keeping your eye on the most. We went up 11.8% in the first half of 2023, and so far we're down about 3%. So we're still up really significantly, 8.8 for the year. 11.8 was actually a pretty good number. You can see it's pretty significantly less than the previous couple of years. So we're glad to see that sale price peak not going up nearly as high. And then with interest rates, we'll see how far they get pushed down this year. I wouldn't be surprised if we're essentially flat, a 3 or 4% drop each of the next few months. So I think that's actually a really good, healthy number where the market's at currently. I think we're trending in a really good direction. We just really need those interest rates to come down. Let's wrap on October. I hope that helped. If you have any questions, let me know in the comments down below. I'm always happy to help. And if you have any real estate needs, you know who to call. My name's Joe Carmack, and I'll see you next time.